All right, welcome back. It's that time again. Let's answer some of your questions. Stephanie Link, I'm coming to you first from Sid Hunter.
Okay.
Do you think Broadcom is good? I'm thinking of a long-term investment in it. Any thoughts?
Well, I own it. I like it. It's down 21% this year, so that hurts, but it does yield 5%. Question is, do you believe that 5% is covered? I do. I think that they have flexibility in their OPEX structure that they can cut if they needed to. In the meantime, you have tailwinds from cloud, telco, offset by mobile. We know they have Apple exposure. We know they have enterprise exposure. But if you really are in it for the long term, those will recover, and you'll be glad at 12 times earnings that you picked it up.
All right, Josh, to you from Jonathan in Florida. What is the impact of Slack in this environment today? Will it be able to grow after COVID-19?
So I think he's asking what is the impact of this environment on Slack, and is this the best things are going to get while we're all trapped at home and working remotely? I think no. One of the things that we've learned about these massive software platforms throughout history is that once adoption begins, then they can upgrade a lot of people to premium version, and these things get sticky. They become part of the lexicon. People are talking about slacking each other all the time rather than emailing. So Slack converts about 16% of its free users over to the paid side. Typically in SaaS, it's more like 2 to 5%. They are a category killer. I think the stock is here to stay. I'm long. I'm not going anywhere.
All right, Jim, to you from Geoff in Los Angeles, California. Can I get an opinion on Viacom CBS? Well, yes, you can. Jim?
Yep. Please stick with it. I mean, this stock has gone through a just awful price decline here, such that you might think there's a going concern issue here, but there really isn't. They just actually raised debt, $2.5 billion, at a 3% current yield on that debt. So clearly the bond market is very comfortable with them. What you're waiting for here is for sports to come back online, because CBS Sports is the crown jewel of the company. I think we can agree that sports will come back. We just don't know when, so hang in there.
Yeah, I mean, we just heard from Mark Lazary. We just don't know when. We all want it back. All right, Rob Seaton, to you from Sanjay in Greenwich, Connecticut. Can you advise the individual investor on how to navigate the current markets, active versus passive, and S&P 500 versus mega caps?
So I would first say we use both in client portfolios, but we've had a bias towards active recently. There's haves and have-nots, and with passive strategies, you obviously get both. I would say biasing towards quality and dividends is where we've been focused, kind of the new defensives within quality growth. The communication services, the healthcare, the technology, but have a little optionality in your portfolio by having some of those too big to fail cyclicals in the mix as well. I'd say that at this point in the cycle, those would be something that I would own at those levels Jim's talking about. 2,500, where I'd be a buyer of those, and I'd certainly be a seller of those at 3,000 on the S&P. So we use both, but right now I'm more actively minded.
All right, good stuff.
And as it relates to the S&P,
yeah.
That is a mega cap index.
Okay, thank you. Steph, back to you from Hari in Atlanta, Georgia. Should I wait for a significant pullback to buy Lam Research?
Well, I mean, Lam is such a great company. They're #1 etch manufacturer, and they, we expect NAND and logic and DRAM to actually recover in the second half of the year, maybe next year. But I do think it's up 33% in a month, even though it's down 14% on the year. It's up 33% in a month. This is a high beta name. You can get this on a pullback for sure. But I do like it. I would put it on your radar for sure.
Josh, Allen wants to know about Avery Dennison. Are you still positive on it? What do you think?
Yeah, well, I loved it in January on a technical basis. I don't really know. I'm not really an expert on the entirety of the company, but I could tell you they have a lot working against them in this environment. Number one, it's a small cap, so strike one. Strike two, it's in the materials sector, one of the worst performing sectors in the overall market. Strike three is it's a global business and it's office supplies. So it's almost like every negative you could think of for the coronavirus reality is stacked up. That being said, high-quality company, been around forever, pays a dividend yield. So this is really about what kind of investor you are. If you're someone that wants to buy something and make money on it within a week or two, I don't know if this is the name for you. If you're looking at this like a long-term investment, maybe it's worth doing more research on.
All right. Pharma Jim, to you from Allen, the Boise legend, at the Boise legend. What healthcare stock have we not discussed enough that could benefit from a post-corona world?
Yeah, so flying under the radar screen, one of the big cap pharmas is Pfizer. Now, look, they're not actively really working on a coronavirus vaccine, but they do have a lot of vaccine capabilities, which mean they can help out. But even outside of that, post-coronavirus, you've still got an aging demographic that's going to need pharmaceuticals. Pfizer is a great play there. It's down more than the rest of its sector, and it's got a great dividend yield.
All right, Rob Seaton from Tim in Utah. For someone nearing retirement, do preferred shares make sense in this environment, and any to avoid?
So preferreds are a more credit-sensitive, equity-correlated segment in fixed income. They exhibit strong rebound characteristics. We actually added to preferreds on March 23rd when the liquidity crisis was really at its worst and they were getting hammered. They're up 26% since, but I think you can still own the high-quality, more liquid, often in the high-quality banks right now, and we're going to continue to own those, and I think you can too.
All right. A bonus, Stephanie Link, last one extra from X-Ray LA. Would be interested to hear your thoughts on GE today. Leave us with something on GE.
It's been tough, right? But it's really because of the macro. It's aerospace, it's energy, it's a balance sheet that's levered. This is a turnaround story. I've said it for a long time. It is a 2 to 3 year turnaround story with a new CEO who's done a very good job at trying to improve the overhead, tons of costs that they're taking out, but also to improve the businesses and the culture. And he is slowly doing it. Last quarter, they beat on free cash flow. And I think they're going to continue to do well once we see a recovery and a stabilization in the economy. But this is very cyclically tied to the economy. So it is going to fluctuate. You have to have patience.